Good morning, everyone. This is Marshall Gittler bringing you the morning comment for July 22nd. The crisis in Ukraine dominated activity on Monday. The dollar gained all around against its G10 counterparts, even against the yen, as the U.S. currency's safe haven appeal came to the fore amidst general risk aversion. Stocks fell while oil and government bond prices rose. Gold was surprisingly little changed, however. Another surprising point, only 2 of the 15 emerging market currencies that we track, the ruble, obviously, and the Czech koruna, were noticeably lower against the dollar, while several of them gained substantially. This shows there's little, if any, contagion effect from the Ukraine crisis on other EM markets. The gains of the high-yielding EM currencies, such as the Turkish lira and South African rand, suggest that carry trades aren't being affected yet. The outlook depends for the market from Ukraine depends on 3 things, in my view. 1, what the Europeans do. 2, how Russia responds. And 3, the results of the investigation into the plane crash. The European foreign ministers meet today to discuss further sanctions against Russia. The question is whether they'll toughen up their sanctions, as the U.S. did, or continue to take a softer line. Secondly, how will Russian President Putin respond? The indications are that Russian support for Ukraine's separatism is waning, so maybe he will take a more conciliatory tone. Finally, the UN Security Council has agreed to investigate the crash. That may be the key to resolving the issue. If Putin does agree to de-escalate the crisis, that would, of course, cause a reversal of the risk-off pattern in the markets. As for today's schedule, the EU foreign ministers meeting mentioned previously is the main event in Europe. From the UK, we have the CBI trend surveys for July. In the US, the CPI for June is anticipated to remain unchanged in its pace at 2.1% year-on-year. Given that US average weekly wages rose by 2% year-on-year in June, this would make a second month in a row that real wages decline, which is a worry to the Fed. Existing home sales for June are forecast to rise, but last Thursday's disappointing house sector data suggests the risks are on the downside. For more information, including technical analysis, please read the full comment on IronFX.com. You can also follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google+ to get more trading ideas. This is Marshall Gittler, head of Global FX Strategy at IronFX Global, wishing you solid trading.